Hey everyone, Mortgage Nerd here. So I haven't done a rate update for you in a while, but I think it's really time. Let's see what's going on. Alright, so let's look at what's going on in these charts. As always, mortgage bonds here, 10-year treasury over here. Mortgage bonds up is good, 10-year treasury down is good. As far as low rates are concerned, this is the mortgage bonds. Mortgage bonds going down is bad. So we saw, this was a few weeks ago when the Fed came out and announced they're going to slow down, they're going to taper their buying of mortgage bonds. The Fed is said to be buying $40 billion in mortgage bonds a month. Which is really more like 90 billion because it's not showing you all the mortgage bonds that they're rebuying from the refinances and the paper that they already own, the mortgages they already own. Anyway, the point is they're buying a heck of a lot. And that heck of a lot is going to be a lot less coming November. We're in October. So in November, it's going to be less. Of course, you're like, why a few weeks ago if they haven't stopped until November? Well, just like if you go and you tell everybody in the country that something's going to crash. Or bad things are coming. People get scared and they pull their money out of the stocks and the stocks go down. Well, the same thing happens with bonds. You tell everybody that the Fed is going to stop buying mortgage bonds and they're like, whoa, less buyers, more supply means my value of these bonds goes down, so I'm going to sell my bonds, and the values of the bonds go down before November's tapering from the Fed. In November, it's going to get worse. It's a fact. It's going to happen. It's coming. It's needed. Inflation is crazy. I just said another video, 4.3 million people stopped working while inflation is at 5.4% year over year. That's insane. Inflation should be in the low twos, like some mortgage rates were if you took advantage. And if you didn't, rates are going up. I'm sorry. Let's go back to this chart. We see mortgage bonds coming down. It came down to this level and bounced. So good. We're finding some support. We found some support here. It was only a little bit of a relief. As the mortgage bonds go up, that means rates went down. Good time to lock. You know, look, if you're not in process and you're getting in process, you're buying a house or you're refinancing, it's not about the overall picture of where rates are. It's about getting you locked at that time at the best rate, catching the low points. So right now, we're looking at maybe locking people in here. You know, as we get up into this area. Let's look at the 10-year treasury. So with the 10-year treasury, this one goes in line with rates, kind of. It goes in the same direction for the most part. If the 10-year treasury is going up, rates are typically going up. That's what we're seeing right here. So 10-year treasury on this huge swing, same thing from September 23rd. That's the big move. We saw a little bit of a relief rally here and then came up, and maybe we'll see another relief rally coming this way. So maybe we're in a new zone. We're in this zone here, this up and down in this area, but it should still be upward bound because the Fed is going to stop or slow down, taper their buying of mortgage bonds in November. So that's today's rate update. Probably the only one I'll give you in October. I don't know. I don't do a lot of them anymore just because, you know, rates have been kind of low. And my message is always the same. Get in process and lock at the best time. The best time was when rates were in their lowest point during the pandemic. The second best time to get in is now. Mortgage Nerd out. Thanks.